Hello again, everyone. Welcome back. In this technical analysis of the stock market video, I call it a vulnerable time because with all the dynamics that are going on, interest rates, dollar, oil, 40-year inflation, we've got the earnings season that has just started with the banks kicking off this last week. All of that at play. The wave count that we've got on the major indices is that we are in a third wave and I'm talking about a third wave of a first five-wave move down. I don't believe this first five-wave move is the end of the bear market. It's just the first impulsive five-wave move down. Now, so in a third wave, usually the market will have a tendency to be the swiftest and move the strongest in the direction of that five-wave move, and that is to the downside. So right now, that's what we're looking for. Now, over the last 4 to 8 weeks, we've had a lot of choppiness and sideways movement. Okay, so the Nasdaq over the last 8 weeks is up slightly. I think it's like 100 points on the Nasdaq Composite. Just not a whole lot of movement. And the Dow and the S&P, I believe, are down over 8 weeks. But here's the picture. Here's what I think is going on. Third wave. Let's just go over here and take a look at the daily view. Here's what I think is playing out. We've got within the third minute wave of the third minor wave, I think we're trying to flesh out a five-wave move, and we've gotten kind of choppy here over the last couple of weeks. Now, I've labeled this as a high here on July 8th, as a minuet level wave 2. And it's retraced a decent amount in here. If I just do this, 2 versus 1, 61.8%. A nice deep retracement of the first wave down right here. So, I like that. And it satisfies kind of the targets that we have, 50 to 61.8% for a wave 2 retracement. But then you get this kind of price action. It could be telling us that something a little more complex could be at play. We could be doing something like this WXY that I've got as an alternate account. And, it could be that we have a WXY or something to that effect, and we just unfold a little more complex type of corrective pattern. So we'll see what plays out in the next week or two. That is the picture on the Nasdaq Composite, but right now my preferred count is that we are working our way down in a third wave here, third minute wave, all within the third minor wave. Let's take a look at the Qs. The picture is going to be almost identical. So where am I looking at? If I had to target this, where are we looking at? The third wave, a normal length third wave, is going to be down around 225. But again, we need to see a clean five-wave structure within that third wave. And I'm just not seeing it yet. Okay, so that's why I just don't feel like this is all complete at this point in time. And these waves, the labeling, let me pause this a minute. Okay, that's a little better. For some reason, they get a little bit out of alignment, and then it messes with the labeling here. But here's the pattern that we've got. This is just a path forward, except for what I just talked about, how, down here around 220, 225. And actually, I've got this maybe a little bit lower now, but this is the path forward on the Qs. What we're trying to do is get a complete wave 2 here, and then come on down in a third wave. And again, every third wave needs to be a nice, clean, impulsive wave pattern. So that is the picture that we've got on the Qs and on the Nasdaq Composite. Let's take a look at some of the dynamics, some of the things that are affecting everything, like interest rates. Let's pull up the high yield bond fund. So here's the weekly. I want to go right here to this moving average view. Now here's the weekly. Look how low we've gotten on HYG. I mean, we are getting doggone close to attacking that March 2020 low. We had a big move up this last week, up 61 cents. And actually, the candle looks bigger than the actual move that we actually had. I mean, 61 cents, we had a bigger move than that on Friday, up 95 cents. But when I look at this, this is where it looks like the high yield bond fund is kind of in sync with what we're seeing in terms of the choppy sideways corrective pattern on the indices. And this could very well be a WXY, and the Y is almost equal to the W, which is exactly what I'd be looking for as my first target on a zigzag like this. Well, and and again, this is a double zigzag when you label it as WXY. So this is going to be interesting to see. Do we continue to push higher, or do we reverse back down out of this little parallel channel that we've got here with this sideways type movement? It's also interesting to note that we had this very sharp move here, and now we're getting this sideways move here. Do we get this? It does make you start to think that that may be what's on the table. Let's take a look at the 10-year yield and just look at the longer term picture. It closed at 2.93%. But we are holding above this long-term trend line, this 20-year trend line. I think it's interesting how we broke above it, came right back down to it, broke higher, got all the way up here to an intra-week high of 3.48%, and then we pulled right back down to that trend line again the previous week. And I'm talking about this trend line right here. This from all the way back here in 2000. Here's the trend line picture of the 10-year yield. Now, for a longer term perspective in terms of what's happening there, let's take a look at the dollar index and the impact that it's having and what's going on with this. This is really interesting. Here's a 5-year picture of the dollar index. And again, I'm on a weekly view. You can see how it broke out above this trend line in here. It almost looks like a large cup and handle type of movement, and it broke strongly to the upside. The Elliott wave picture I've got on the dollar is this. I think we could be getting close to finishing off a 5th minor wave within the 3rd intermediate. Then we're going to get a pullback. Then we're going to push higher again. And I still think that this is all just primary wave 1 within cycle wave 3. And why do I think that? Because when you look at the longer term picture of the dollar, I mean, look where we are. And here's the highs back in 2000. But everybody's talking about where interest rate and where inflation is. Here's our 40-year high inflation and the interest rates that were used to fight it and try to kill it. Okay, and as a result, this is what happened with the dollar index. So here we are sitting right over here. It looks to me like we potentially have a long way to go. We'll see. We'll see if this continues to play out. So that is the picture on the dollar index. What's the other dynamic that's going on? Let's take a look at oil. Here's USL, and this is the count that I was working, and I thought maybe that we were still working a 5th wave to come. Right now I'm leaning into this count. Right now I believe that we've had 5 waves up, and this is what I'm counting as 5 primary waves up coming off the low of April 2020. Oh, you remember that when West Texas Intermediate actually traded like -40? I mean, nobody had ever seen that. That was pretty crazy. So here we are with this wave structure, and this would imply to me that we're going to chop our way back down, possibly into this prior 4th wave right here of the 4th primary wave. Okay, so we'll see if we continue to get that. Right now, we've been down for 5 weeks in a row. So pretty dramatic movement. You can see the divergence between 3 and 5 right here. Same thing happened towards the end of this 3rd primary wave. So right now, this is the way it looks. West Texas Intermediate closed at $97.60 on Friday. All right, let's take a look at the 3 biggest heavily weighted stocks in the S&P 500 and the Nasdaq 100. Okay, here's the side-by-side view of Apple, Microsoft, and Amazon. the first, second, and third largest weighted stocks. And it's interesting how over the last few weeks, since mid-June, Apple's been in fairly decent rally mode, but it also looks like it's approaching this resistance zone that I talked about, I think it was last week. And so I think we're going to run into a little bit of overhead resistance in here. It'll be interesting to see how it handles it this coming week. And then when you look at Microsoft and Amazon, they look like they are just chopping sideways. I mean, the whole picture in here from mid-May, I mean, if you look at it, it just looks like a sideways type move. And so now it's going to be real interesting to see that if we run into resistance over here on Apple, these are pushing sideways. Do we roll over and break down for the next leg down? And that would be in sync with what we're looking for in the market and at a point in time where the indices are fairly vulnerable. Okay, that's it for this weekend. If you felt like the video was helpful, give it a thumbs up. If you're not a subscriber to the channel, hit that little subscriber button. And if you'd like more of this information on a regular basis, head on over to joehenches.net. Check out the website and check out the membership. Everyone have a great rest of the weekend, a great week. It's going to be really interesting.